Hey guys, how's it going? It's Andy from Magoo Investing. Happy Wednesday. So far in the month of April, we've been talking about the most exciting, most requested renewable energy and green energy stocks. So if there's a stock you guys would like me to talk about in a future video, be sure to let me know in the comment section down below. So far this week, we've talked about two stocks that are already a part of my portfolio. We started the week talking about NextEra Energy, ticker symbol NEE, which is one of the most reliable utility and green energy stocks out there. And then yesterday we talked about my personal favorite when it comes to overall stocks with General Electric stock, ticker symbol GE. And today we're going to be making the switch talking about solar stocks. And so far I have not talked a lot about solar stocks in the past. I've talked about Enphase Energy, ticker symbol ENPH. I've talked about First Solar, ticker symbol FSLR. But today we're going to be talking about Canadian Solar, ticker symbol CSIQ, because this was a stock that I've seen talked about a decent amount on YouTube, Reddit, Twitter. And whenever I see a stock discussed online, I usually think, oh, it's going to be a very volatile stock. But the more research I've done on it, the more exciting I think Canadian Solar is overall. And so in this video, I'm going to be breaking it down into three parts as always. Part one, we're going to be talking about the history of the stock, the reasoning, why the stock has moved over the past 2 decades that it's been a publicly traded company. Part two, we're going to go into the recent quarter's earnings and the full 2021 guidance that the company released. And then in part three, we're going to be talking about my opinions if CSIQ is going to be worth being added to my portfolio overall. In the past couple of days, I've been adding to my renewable energy stocks in my portfolio overall because I want it to be a larger weighting my overall portfolio. So I'm always looking for better opportunities, and we're going to be talking about what I see with Canadian Solar, ticker symbol CSIQ, for a long-term investment. Before jumping into it, I have to say this is not financial advice, and if you've been enjoying these videos, I'd really appreciate it if you hit the like and subscribe button, as it would help my channel out a lot. So let's start with part one, talking about the history of the stock. So Canadian Solar stock, ticker symbol CSIQ, is currently trading for $48, and it's down around 7% on the year. It has a 5-year monthly beta of 1.52, which is higher than something like a GE, but is pretty on par with a lot of the stocks we're going to be talking about in the clean energy stock month. Looking at its 52-week range, you'll see that it's up pretty significantly from its lows of $15.61, but it is down from its highs of $67. This is pretty similar to what we've been seeing with a lot of just stocks in this overall sector. A fantastic push up in the second half of 2020, have a very nice January, and then things have been selling off kind of recently. This stock went public back in November of 2006, and here's how the all-time chart looks. Similar to most renewable energy stocks that IPO'd in the 2000s, it had a little bit of momentum at the beginning, and then it sold off pretty significantly over the past decade, and it's really taken up until pretty recently for the stock to start recovering. Pretty much every stock in the sector has had a fantastic jump in the past year on a lot of increased optimism. Here's a breakdown of CSIQ's price history by year. You'll see a lot of big years, and you'll see a lot of pretty tough years. And here's a revenue chart since it IPO'd, and while it's been somewhat up and down, I've been pretty impressed that revenue, if you just had to trend it for a single line, has been trending up for the past decade. And you can't say that with a lot of these renewable stocks that have been around for a long time. You usually have a lot of momentum at the very beginning, and then things start tapering off in the early 2010s. I think of something like a Plug Power or a First Solar, but Canadian Solar has done pretty well when you look at its overall revenue. That increase in revenue led to positive net income for a company annually since 2012, which is very impressive, especially talking about some of the struggles that a lot of the other renewable energy stocks have had in the past. However, their net margins have been slipping a little bit recently, and I'll talk about the reasoning behind that because whenever I see a trend like that, especially with margins, I want to know the reason why, and the company in their past earnings report came out and pretty much explained exactly what was going on with that and why the margins have been decreasing over the past couple quarters and why they expect them to recover in the next upcoming quarters. But I want to talk about the solar industry overall because I think it's really interesting. In the 2010s, the Chinese government spent a lot of money in the form of loans to Chinese solar companies, and the result of that is a lot of new technology was put out into the world. Then you start getting the Chinese solar companies that start dumping solar panels in the United States at a lower than market price. And so this is fantastic for consumers because it lowers the barrier for entry to get into the actual solar industry, but it's very detrimental to a lot of the United States companies because when a company is dumping their product below market price, it's almost impossible to try to compete with them. Look at something like an Amazon that has priced out a lot of its competition in the past decade plus at this point. So it got to the point where the US government had to intervene and try to limit the Chinese companies from dumping these products below market price. This led to, in 2018, Trump put a tariff on solar panel imports from China, and then in 2020 he removed a bifacial solar panel exemption and slapped an 18% tariff on those panels. Another way that the U.S. government has been pushing solar has to do with tax credits. There's currently a 26% federal investment tax credit for installation of solar panels. And when the Biden administration expected to promote the usage of solar in the upcoming years, that's why there's a lot of optimism, just renewable energy stocks overall, in addition with the solar stocks. But there's been some news that has pushed it down recently. The stock fell after they announced that they would be floating $200 million of senior notes that will go from long-term debt and would be converted to just normal shares in the upcoming years. That sale will partially dilute the value of shares by 11%, which is the reason why it fell 10% because of that news. Let's go into part 2 because this is mainly the reason why I think Canadian solar is such an interesting idea for a long-term investment. Let's talk about the earnings report that happened back in March. They wrapped up their full 2020, so we'll be able to see their full year of earnings and compare it to the past couple years and see how the pandemic has really affected them. They also gave full year guidance, and we'll talk about that. So let's start with the fourth quarter results. They had solar module shipments of 3 gigawatts. That was the higher end of the range that they gave. Revenue of $1.041 billion, that was up 14% and exceeded their guidance. Gross margins of 13.6% compared to guidance of 8 and 10%. And that results in a net income of $7 million. Going back to gross margin, it was a drop from the 21% that they had for their gross margin in the previous quarter. They describe this as quarter over quarter, which is not a comparison that you see very often in the investment world. So I was kind of surprised to see that. You usually see a lot of year over year type of numbers because it's not as easy to compare one quarter right next to each other. Usually you see some trends, especially with maybe retailers. You see stuff towards the holiday season, and that's why you compare year over year and not quarter over quarter. But that's how they decided to show it. But this decline in margin was a result of increases to their manufacturing costs. The president of the subsidiary CSI Solar, which we'll talk about pretty soon, mentioned that polysilicon prices increased another 25%, and the value of currencies that they've been using have depreciated over the past couple months, which has led to higher costs, which in turn results with lower margins. And here's their full 2020 highlights. They had 32% annual growth in module shipments to 11.3 gigawatts in line with guidance. They had net revenue of $3.5 billion, which is an annual growth of 9%. They had a positive net income of $147 million, and they expect to deliver and capture approximately 10% of the market share in the U.S. for battery storage, which is 10% is a lot for a very emerging market when it comes to battery storage for renewable energy. And they expect to carve out the IPO of CSI Solar subsidiary, which is expected to raise a lot of money for the company without issuing a lot of debt. This will be an IPO that will happen on the Chinese stock markets, so that's going to be very interesting to see what happens there. One of the areas that I think I'm most excited about has to do with their storage project development backlogs and pipelines. Here's what it looks like at the end of January of this year. They currently only have 3 megawatt hours in operation, 913 in construction, 1,388 in backlog, and 6,467 megawatt hours in the pipeline. And these are the numbers that they expect to try to capture around 10% of the overall market in the US in 2021. And looking forward, here's the guidance that they provided for the first quarter. Total module shipments to be 3 to 3.2 gigawatts, total revenue to be $1 to $1.1 billion range, and gross margins to be anywhere between 16 to 18%. And if you remember, that will be a very nice boost from the gross margins of 13.6% they saw in the last quarter. And with their full guidance for 2021, they expect total shipment guidance of 18 to 20 gigawatts, project sales guidance of 1.8 to 2.3 gigawatts, and revenue is expected to range in the $5.6 to $6.0 billion. And if we compare those to the numbers that they reported for 2020, their total shipment volume would be a 59 to 77% increase year over year. Revenue growth would be a 60 to 71% increase year over year after posting annual growth of 9% in 2020 comparing it to 2019. So when you look at the outlook for this company, things seem incredibly bright based off of the numbers that they've reported in the past. So let's talk about part 3 and kind of give my thoughts on Canadian solar, ticker symbol CSIQ, for a long-term investment. Overall, I'm actually a really big fan of Canadian solar, and I'm kind of surprised by it because when I started making this video, in my mind, First Solar, ticker symbol FSLR, was my favorite solar stock to buy overall. But the more I look at it, I think CSIQ could have a decent part in a lot of investment portfolios. Let's compare it to First Solar because I think they're the main competition, not only with the products that they're selling, but also competing for a spot in my overall portfolio. Since 2006, First Solar stock has been outperforming Canadian solar with total returns of 236% compared to 205%. CSIQ wins based on diversity of geographic revenue sources, with 45% of the revenue coming from the Americas and 1/3 coming from Asia. So you have some nice diversity when it comes to the revenue sources based off of the areas that they're going to be selling. When you look at PE ratio, which is not something that I really look at very often, but it is something that some people take into account, so I wanted to mention it. CSIQ currently has a PE ratio of 27.7 compared to other stocks like Enphase with 187, Solar Edge at 104, and I closed my notes. And First Solar does have it slightly beat. So as of right now, First Solar is in the lead when it comes to PE ratio. But overall, I think Canadian Solar does have something going for it that I think it has incredible guidance going forward and the ability to take a lot of the storage market. You do have some very interesting differences when it comes to these types of companies that you're going to be looking at. You have First Solar, it's mainly going to be doing the larger type deals. They're not really working with residential. When you look at something like a Canadian Solar, they're working more, they do sell, just normal solar panels, but they're also getting into the energy storage market. So these are two different stocks that are pretty similar when it comes to, they make solar panels, but the type of products that they're going to be giving out slightly different. So as of right now, I'm not ready to pick a winner. Tomorrow I'm going to be talking about First Solar because I think it's only fair to talk about one competitor, give it a full video, and then talk about the other one, and then make a decision on which one I think is better. So let me know if you guys have a preference between Canadian Solar, ticker symbol CSIQ, and First Solar, ticker symbol FSLR. Thanks for watching these videos. I appreciate all the support, and I will see you in the next video.